Hey everybody, it's Pete. Welcome to today's Best Stock Picks. It's Friday, July 10th, 2020, and this is an exhausting week. I don't know about you, my hair's a little poofy today. If you're day trading, especially right now, it is exhausting. We're getting these amazing first hour of the day to trade, which, by the way, congratulations to everybody who joined the boot camp this week. You experienced a very profitable week. But most of the money that we've been making as day traders right now have specifically been within that first hour to 90 minutes, which really highlights the fact that you need to be prepared for the open, which actually is something that's important and interesting, actually. A lot of people that come in, whether they come in as an experienced trader or if they come into the boot camp as somebody who's absolutely brand new, they've been kind of brainwashed to think that you have to stay away from the open because that's the most volatile time of the day. And nothing could be further from the truth if you're prepared. If you're prepared, and this applies to swing trades as well, which we do both. I want to make that clear. We're not just doing day trading. Day trading happens to be the focus of this comment right now. Is if you understand that the open, and I'm specifically talking about the first 90 minutes of the day, if you are prepared with exactly what you expect to happen, and that's a pretty bold statement, but that's actually what it takes to be a professional trader. Again, whether you're holding a trade for an hour as a day trader or whether you're holding a trade for 10 days as a swing trader, you need to understand what you expect to happen. Far too many people get into positions where they're like, I know I just want to buy the stock because I watched it on CNBC, or I just want to buy the stock because it's going up right now. That's the most bullshit answer in the world to determine you want to be into a position. You need to say the stock has been up for the last 3 months. It pulled back for the last 2 days. I'm looking to buy yesterday's low. If it buys yesterday's low, that's going to be the first piece of my trade. And as soon as it gets up to a certain price, then I have confirmation. I have feedback from the market that it's going to do exactly what I thought. And I'm going to hold the trade for the next 6 days or until it reaches my profit target. That's the foundation of understanding what to do. The same thing applies, but on a much bigger scale. And when I say bigger scale, I'm talking about activity level, especially when the market opens, if you're a day trader. If you're a day trader and you have your day planned out, which a lot of what we do comes from order flow and tape reading, and then we take the tape reading and all the way down to the intraday price action, and you could have a list of 30 stocks that you sort down to 6 of the most amazing opportunities that are doing exactly what you want them to do on the open. And that's where the money gets printed, quite honestly. If you're prepared with a bigger list, and then after the market opens, you say, these are out of the 20, these are the 6 that are doing exactly what I want. But here's the key. You need to first know exactly what that is. Do you want a higher opening? Do you want a lower opening? Do you expect it to wait the first 15 minutes and then you're only going to trade a breakout of the first 15 minutes? Once you have your trading screen set up properly, once you have exactly what you expect to the market to do. So I'll give you an example. Probably the best trade scenarios, which you haven't had a lot of. We did have one in SE, which I'll point out in a minute. It doesn't matter whether it's a day trade or a swing trade. If you have a certain setup where order flow is obvious and reading the tape, doing your tape reading function, working that skill, which is your lifelong skill, and you get to the point where you say, okay, I know exactly what I want to see. The stock did exactly what I expected it to for the last 2 days, or the stock has done nothing for the last 2 days, which we're going to get into one of those stocks as well, but that creates opportunity, and you set up your trade scenario, which I'll walk you through in a second. You have power. When the market opens or the week opens, you have absolute power, because here's where traders get confused. They try and trade everything. No, that's the dumbest thing you could possibly do, especially if you're a new trader and especially if you have a small trading account. I would much rather see you say, here are the 20 stocks or 10 stocks or whatever it happens to be. And then when the market opens, you know exactly what you're looking for. But here's the key. All 20 are not going to do exactly what you're looking for. If they do, great, fine. Then pick a couple that you want to trade at that moment. But the odds of all 20 doing exactly what you want are pretty much zero. Honestly, unless something major happens where there's this major announcement, everything's just flying in one direction, up or down, it's not going to happen. So you take a big list, and then when the market opens, when you sort it properly, using order flow, reading the tape, and then using your watch list properly, it's quite honestly, it's pretty easy to trade the open because nothing's a guess anymore. You're not sitting there saying, I have no idea what's going to happen. I know exactly what I expect to happen. And here's the funny part. Traders will email me after they join the boot camp, and they're like, I had 7 trades, 7 stocks in my list, and only 2 did exactly what I expected it to. I'm like, yeah, and what'd you do with those 2? Think about it. Who gives a hoot about the other 5? 2 stocks did exactly what you expected. Trade those 2. Print money in those 2. Who cares about the other 5? Why do you care about the 5 that didn't do what you wanted to do when 2 did exactly? If you go into the day saying, I'm expecting this stock to open lower, test yesterday's low, find buyers, and as soon as those buyers come in, I'll see a spike in volume, I'll see the stock go well bid, and then I know I have a safety net because all of a sudden it did exactly what I expected. Trade the heck out of those 2 stocks. Who gives a crap about the other 5? That's how you print money when you're a day trader. You go into the day understanding order flow, you understand the tape, and then you have expectations for the day. Be bold. Trust what you know. That's what it means to act like a professional. And when you go into the day acting like a professional, you know what? You start making money like a professional. It's when you go into the day every day saying, well, I'm just going to wait to see what happens. I'm going to see, wait to see what the market gives me. That's bull. That's passive trading. You need to be actively saying, this is what I expect based on the last few days, based on the last few weeks, based on the last 3 months. Here's what I expect the stock to do in the first 90 minutes of the day. That's where the money's printed. Let's get into the market today. SPY is still hanging around, right around that window. Quite honestly, if you're trading futures right now, specifically the SPY, the NASDAQ, I actually feel sorry for you. There's not a lot of opportunity, and especially with the volume really just drying up, it's been a challenge. We mentioned yesterday that it's actually good. We actually like the fact that it gapped and held, but we really, quite honestly, nothing. It's basically been 4 days so far. We're heading into Friday's trading today. Absolutely nothing going on here. I will say this, though. We do have some individual stock opportunities. I want to congratulate everybody. And again, as I said, just a phenomenal day to join the boot camp this week. If you're watching this stock yesterday, it was pretty much right out of the gate, gave us money. Some intraday, the market sold off. I think it had something to do with the Supreme Court and Trump's tax returns. Honestly, it really doesn't matter. Real traders don't find out after. They just trade the tape. And then we had some nice move yesterday. It actually traded double normal volume of what it does yesterday. We also had some easy money yesterday in DocuSign 2 different times during the day. We actually did take this last trade during the afternoon. It didn't work out. But look at what the stock's doing. I mean, come on. If you understand the tape, if you understand order flow, if you understand which stocks to be in, it's really not that hard to be in the right trades and position yourself to get paid. The problem that a lot of traders have is they don't understand when is the right time to get in. A lot of the problems that we have with people coming into the room, and quite honestly, people watching these YouTube videos, by the way, if you like the videos, definitely subscribe. That would mean the world to me. And if you want to learn about the boot camp, you can scroll down and see how other traders are doing it, see if it's right for you. The opportunities in some of these stocks have just been absolutely amazing if you're in the right stocks. The problem that some traders are having, and this is the trade in SC that I was talking about, where we had an opportunity here and an opportunity here, and we set the target at 132. It didn't quite get up to 132, but this was the entry. You need to understand when to get in to set yourself up for opportunity where you have the lowest risk, the lowest exposure, and then if the stock moves against you, you're not really going to lose that much money because you've kept your risk lower until the market proves the idea. See, that's a big part of trading that a lot of traders don't understand. Your initial entry should be to get feedback on your timing and your idea. And then if the trade works out, you add to it. It's really that simple. You're keeping your exposure lower until the idea proves it's working. You want to get a head start. I can't explain it strongly enough that you don't have to go max size on your initial entry. And that's the point I'm bringing up is a lot of traders are complaining they're getting stopped out of good ideas, and you're getting stopped out of good ideas because you're going full share size and hoping the market comes back. That's a strategy where one trade is going to wipe out your entire account because you're going to keep saying it comes back, especially if you just started trading right now in this market because the Fed stimulus package is holding this market up. And there is a bid under the market. We're opening up, we're a little bit lower right now, although the futures are kind of creeping their way back. Do not have the attitude that the market always comes back, because I'm telling you right now, one time the market is not going to come back where the government's going to say, you know what, we have to let capitalism do what it's going to do, and you're going to wipe out your account. Have stop losses, have planned for managing the trade, anticipate your entries, and get in at better prices. So a couple of the stocks that we're going to highlight today. Lulu finally it gapped here after the news of the acquisition of Mirror, the personal trainer mirror that you put on your wall. And now it's actually flirting with the level that we like it at. We're looking at over 320. It's about 318 right now pre-market. So I'm going to put on a little bit of a piece above yesterday's high, fully expecting that if it does get up to that 320 level, we're going to look at it punching through. INO and NIO, both of these are driving me nuts when typing them into the trading room. But we actually have a really interesting setup here in INO. I had 2 false starts yesterday and the day before, but absolutely has to be in your watch list. We start to get these types of consolidations, especially multi-day consolidations, and they tend to explode. If it breaks to the downside, I'm going to leave it alone, but if it breaks to the upside, I'm looking at 32 as the next target, and that could happen pretty quickly. Next one, we have NIO. A lot of people are trading this one long too. Again, because of how far and how fast it's moved, I actually really like it as a momentum trade, probably more as a day trade. I am not carrying these overnight just because I want to see them pull back to get a better entry to be a swing trade. We haven't got it yet. You know, something maybe even just a little bit like this for a few days. And right now we're not getting it. So it's a good day trade. I am not swing trading yet. LVGO, another stock that meets the criteria. Again, pushing to new highs on higher volume, multiple gaps in a row. I love the stock long. Again, it's a day trading stock for me right now because it's very hard to say to myself, I want to get long this stock today. I want to be a buyer of this stock, and I anticipate it going up again for the next 3 to 5 days. So this is where your timing and recognizing and learning how to read the tape really puts you in a better position. And let's just think about it. If you look to the left and you see what the stock normally does, the last move basically went from 38, let's say, to 61. Okay, so basically 38 to, yeah, let's basically use this close here to 60 and a half. So basically a $22 move, and we just went from 72 to 105. So we just went further than what it normally does. It went double normal volume yesterday after multiple gaps. So what are the odds of this stock opening higher, following through, and pushing higher? Not very good. So what we want to see is day trading it as long as it meets the day trading criteria that we talk about it all the time, and swing trading, waiting for a spot to manage risk. This is where swing traders, and especially inexperienced swing traders, find themselves with like, oh gosh, every time I get into a trade, I feel like it's a losing trade. This is why you're buying it too late. You have to learn to anticipate your entries and look for better spots to manage risk, and then get in your trades, and you'll start to see that most of those trades don't move against you quickly because you anticipated better entry. So again, day trading versus swing trade. FSLY meets the criteria as well. We had double normal volume yesterday. You can just pull that up for a second. You can see the volume keeps increasing. And normally volume is good in the direction of the move, but when you start to get a big spike like that and multiple well-bid candles in a row after a momentum move, a higher opening today is most likely going to be reversing, and it actually looks like it's trading lower right now. So again, anticipating whether it should be a swing trade or a day trade. We already discussed DocuSign. We talked about Roku. Hopefully you took advantage of this trade yesterday. We actually talked about the differences when the last 3 times it hit 132 and immediately reversed. This time hit 132 and stayed. We had an overnight in Roku yesterday, and we actually had so many people in the room yesterday. Again, I'm going to use the terminology. Please use it in the context. Printing money in some really easy trades yesterday in Roku. And again, that's understanding order flow. That's understanding how to read the tape. And that's understanding how to prepare for the open. And it just exploded. And a lot of traders, I'm saying a lot of traders, people in the room did really well in this stock yesterday. I'm just going to put it that way. And if you're not in the room, you need to get in there. One other one that was called out yesterday that is just gapping pretty much consistently. So we had a bullish gap, a bullish gap, a bullish gap, a bullish gap. Well, actually, this one's not. It wasn't outside the range, but GSX as well. Unbelievably good swing trade. But again, another stock that has now reached the area that the odds of buying a higher opening today are not good. If it opens higher and pushes higher, there's going to be a level of what the stock normally does. I don't know why I keep using air quotes, but the point I'm trying to make here is that you have, before you put on a trade, you have to say, what are the odds of this continuing based on what it's recently done? And that could be on a weekly chart if you're holding for a couple of months. It could be on a daily chart if you're looking to swing trade. We make these same decisions as day traders, but in this particular situation, I like the stock long. I don't like it long in a higher open today. I could use it as a day trade if it meets certain criteria, but I'm not looking to swing trade the stock long. I keep bringing this up because a lot of new people into the community are saying, I understand what I'm looking at, but every time I put a trade on, it feels like it's a losing trade. It's because of these types of decisions that you need to learn how to make. And this is what tape reading is about. That's the difference between chart reading and having an account versus tape reading and becoming a trader. Let's see, OSTK. Oh, no, you know what? I want to talk about AMD. AMD actually has been one that I've been like, nothing's going on, nothing's going on. It's sitting in a trading range. And a bunch of people are asking me about this. And yesterday it was brought up again. And I'm like, nothing's going on in the stock. And of course, as soon as I say nothing's going on, the stock just absolutely explodes, gets up to the resistance. So really, it's got to get above 50 and stay above 57. So have your alerts at 57. It'd be pretty interesting to see if it gets up there today. OSTK, again, I keep talking about it. It's been a good stock to trade. I personally have not had success trading it, but it's still a good trade. We actually had a little bit of a pause here. Now, we had a nice momentum move and a pause. A lower opening, as long as it meets our day trading criteria using our watch list, it's actually something I'm going to be looking at. Amazon as well. How do you not keep looking at this stock? It just keeps going higher and higher. Any stock that's near all-time highs, you have to be paying attention to, as well as Facebook. Facebook, interestingly, after finally getting above that 240 level that we were watching, now an inside day. I like a breakout of the inside day in Facebook today. Clearly, if it breaks down, just let it go. If it breaks out of yesterday, we're going to be keeping an eye on it. Etsy actually had a really nice pause again. The thing you want to see with the volume during a pause, you want to see the volume dry up. And yesterday was the lightest volume on the breakout, ironically, which is not what you want to see. I still want to be long the stock, but because of the increase in volume during the pause, I'm more likely going to be working in order here on the breakout as opposed to looking to get in there a little more aggressively. NVAX, which exploded a few days ago, has now pulled back beautifully. I am looking for a spot to bid NVAX. I just haven't found it intraday. I haven't found a good opportunity. I'm looking to turn a day trading entry into a longer term swing trade. But one interesting one is the home builders. You can see Lennar has now keeps trying to peek through, what's this level here, 40, 60, 64, 50, 65. So now I'm going to start paying attention to the home builders. KVH is not as strong. So we're doing a little sector analysis here. Pulte Homes is not as strong. So if the housing market turns around, it looks like Lennar is the strongest of the bunch. But maybe Toll Brothers has a little bit of the most profit potential. So really the bottom line in the market right now, if you're trading index futures, I feel sorry for you. It's just chopping around a light volume. Ideally, if we can get out of this range, it will start to hit a new level and get some new momentum buyers and some fresh institutional activity, maybe smart money to start hopping on it. Right now, look, the bottom line is everybody's asking me the same question, what's going on? If you could learn to trade in this market, which congratulations to everybody who's in the boot camp, is finally really getting structured. That's the single biggest thing that everybody has. I understand what I'm looking at, and that's what makes trading exciting. You could trade this market. You could trade any market. I get asked quite often, is it good for me to learn in this market because it's tough? 100%. You'd rather learn in a market where you really need to understand what to do, which is what happened to me in 2000 when I first started trading. Internet boom was just finishing. All of a sudden, it was hard to trade. I actually learned how to trade, and the other people that only knew how to buy and keep averaging down and the market kept picking it back, they're all out of the business, and they're broke. Great environment. If the market picks a direction, you'll be all over it. I don't know what else to say other than we're very, very stock specific right now. So be on top of your stocks, be on top of the volume in your stocks, stay away from opportunities that have like what I call melted candlesticks, where it's opening and closing in the same spot. That's very hard from day to day and week to week to make money in. Find stuff that has obvious order flow, obvious momentum, which I covered a video a while back on momentum, and you'll be in good shape. You'll be in good shape. If you're struggling, absolutely learn more about the boot camp, because for the tiny, tiny investment that you make for 30 days for what you get a lifetime skill, it's kind of a no-brainer, quite honestly, because most people risk 10 times what the boot camp investment is on one trade. So it's just silly not to sign up. So anyway, have a great day. Have a great weekend. And if you're in the boot camp, thank you so much. I appreciate you joining me. Have a great day, everybody.